everyone. Welcome to Successful Living. We're here today with Greg Picaro from Otrando Picaro & Associates, CPA firm in Warwick, Rhode Island. And Greg, I can't imagine kind of what you've gone through in this period of time. How are you?
I'm doing okay. It's been an interesting year so far, to say the least.
Yeah. Tell me, what has, obviously, things have changed, but is it business as usual, except not physically seeing anybody?
It's definitely not business as usual. We had to adapt, and thankfully we're able to adapt from a technology perspective pretty quickly. So, and we moved all the staff are working remotely. We have stopped seeing clients in person for, probably more than a month now. We stopped, I think, in the beginning, second week of March. That's totally different. Obviously, clients had to adapt. I was thankful we had the capability to do what we did. And we got work going. We were able to get work going. I don't believe it's as efficient working from home. I'm personally not that great at it.
Yeah, me neither.
So I was looking forward to get back in the office. And now we've since restructured it. So we have half the firm coming in on one day, the other half coming on another day. I have 2 floors in my building, so everybody's pretty separate. All kind of sanitation stuff all over the place, So we've adapted, and I'm thankful my clients and my staff did such a good job. But it's definitely not business as usual.
Yeah. And have you had, it seems like the last week or two, I've actually gotten a few clients that have said to me, listen, totally your call, but I'm okay coming in. Has anyone said that to you, and have you had anyone in yet?
So we have not, and we're still not encouraging that, mostly for the perspective, everybody's situation is a little different. We have, like, one of our staffs just about to have their first child, for example, so we've kept her even more segregated. Others have, not, I won't say underlying health issues, but complications they're looking to avoid. And so, and me personally, I feel like if I were to get sick, then who's going to run? So I've been extra careful to try to stay away. But the truth of it is, we're out, getting gas, going to the grocery store. The exposure's there, you know.
Yeah.
And so obviously that time will come pretty soon where we're going to get back to seeing clients in person, and it's something they're looking for. There's no doubt. Many have said, look, we got to set up a meeting. And I think probably by the end of June, I would guess that people will be even more open to that idea.
Yeah. So what I wanted to do, I want to talk about kind of 2 main topics. I think the first thing was, the stimulus that everyone expects. You and I have kind of talked offline about this a little bit, but I think it's important for people to kind of get their head around it a little bit more, that if they didn't see it yet, that's not the end of the road. They didn't forget about you. What are you seeing out there when it pertains to stimulus checks and deposits?
Well, it's sort of a mixed report. I have several clients who have acknowledged they received, their payment via direct deposit. Many have not still received their checks. Most of those people either didn't have direct deposit information in the system, and because maybe they owed money. Some of them, their income in those years, 18 and 19, might have been too high, so they weren't eligible based on that, but they might ultimately be eligible based on their 2020 income. I purposely kind of stuck my head in the sand on this one because I knew it was out of my control. I can't really help clients get the stimulus any faster. The IRS has tried through their website to provide a mechanism for people to request it, provide data so they can get the direct deposit. That has worked and not worked. We've had several clients try and they can't get the information they can't get the IRS to acknowledge the return was in the system. So I've said, look, there's not much I can do. You have to keep vigilant and be aware that at some point you'll get the money. The government is going to give everyone the money. And then we've had clients who had deceased spouses or whatever who received checks, and technically they're supposed to send that money back. I don't know how they're going to do that. I don't know who's going to do that, but there's all kinds of complications, which was expected. This was a huge undertaking, very quickly adapted. I think for all intents and purposes, the government did a pretty good job trying to accomplish this task in a fairly short period of time.
So the number in the end, when this is all said and done, whether you qualified or not qualified. So let me give you for instance. So in 2018, I had a client that filed, they qualified, then their 2019 tax year. So obviously what, we're filing now, they haven't filed yet, but they wouldn't qualify based upon that. They got their money. Is that something they're going to have to pay back?
So, this is like good news, bad news in a way, right? So the good news is the answer is no. So the IRS, according to the IRS, they do not have a mechanism to collect the stimulus back from anyone that was received it, but otherwise would not have been qualified to do so based on the way the law was written. And that's bad news in a way too, because obviously that money could have been used to help the people that really had the income below those thresholds.
Yeah.
So like I said, it's good news, bad news. Some people are going to get the money and shouldn't have, and then there are people still waiting for money. So I wish they had a reason or a mechanism to recapture it, which they did way back when, if you recall, when I think it was under the Bush administration, they had that crazy rebate for like $600
Right.
or $300, and there was a reconciliation of that. If you got too much or too little, it all flushed through on your return. It was a nightmare, and I'm not looking forward to that relative to the stimulus in 2020 when we have to figure out that. But they didn't do that in this case, according to the IRS. So I think people are going to get money they probably shouldn't have gotten.
Okay. And then regardless of, well, when they do get the money, is that taxable or not taxable?
Fortunately, that is not taxable. But I'd just like to mention, since you raised that, the unemployment benefits that the federal government is subsidizing is taxable.
Federal
So
and state?
pardon me? But well, the state one has always been taxable. Fed, this is like a new thing from the Fed perspective, giving unemployment benefits to subsidize what you got under the state benefit program.
Yeah.
Those are taxable as well. So hopefully people are aware of that. So when it comes time to file their return in 2020, they're going to have an extra $600 per week for as long as they were on unemployment, in addition to their state unemployment. So, and they're not doing withholding on that. So there's going to be a gap. So I hope people put some money aside to cover that liability for 2021 when they have to file their tax return.
Yes. I mean, I've run into that a lot with people that, they just didn't figure they had to pay any taxes on it. Take it. And I told them, you need to put that money somewhere. I didn't know for sure if they gave them the option to withhold federal taxes.
I believe they do.
No, I don't either. It didn't seem like it. Okay. So let's move on to, the PPP loan. And I know there's a lot of different loans out there. Obviously, this is the most popular one. Quickly summarize maybe what it was and kind of the current status of that. And I know that's probably given you an extra tax season in itself.
So, I was following the evolution of the program before it became law, and was preparing myself to help clients recognize what the opportunity was and prepare for the application process, which everyone knew was going to be on a first come, first served basis. And even though it was a lot of money, $350 billion in the first round, it was going to go fast, which it did. So there was a lot of pressure on people to get the information done, get it in the pipeline, get it to the SBA, and at least be in the queue, so to speak. Each bank did the process different. Some did better than others. And I found that the smaller banks did a much better job helping their clients get their application into the system than the larger banks did. And now, as it turns out, we ended up with a round 2, which gave people a second chance. And from what I understand, based on a conversation I had with people from the SBA last week, there's still money available in that program. So if there's viewers out there that haven't applied, it's still time of the essence, but you should do it sooner than later. Or consult with your accountant to see if it makes sense. So it was complicated for people. They needed to get information together, get it together quickly, and we helped a lot of our clients get.
If they got rejected for whatever reason, not just running out of money in the first round, is it worthwhile for them to try to apply for it again? Or
there was really no such thing as rejection, because it wasn't a credit-based loan. The most common rejection that I've seen in the second round was duplicate applications. So some people got smart and they would submit applications in multiple banks, and then they would have 2 loan applications in the process. They would only do one. So some people would get rejected on one application and the other would get processed. The only other issues we've seen was inconsistent data. So if you provided the wrong federal ID number, or we had one situation which we resolved where there was a matter of whether the entity's charter was in place, the corporate charter had been revoked. So there were complications, but for the most part, there wasn't a pure rejection process. As long as you provided the documentation that was asked and you got it in the pipeline quick enough, the SBA would have approved the loan.
Okay. All right. So once you if you do have the loan, it's not done and over. What do they need to make sure that they're doing after that?
Yeah, so when we were speaking before, as you point out, not everyone realizes, and this is true, I've spoken to some clients about this, that there's a second totally different process to request forgiveness. It's not automatic. I encourage clients to read the note that they sign with whatever bank, which lays out what they're going to be requesting at the time forgiveness is due, which is generally speaking after that 8-week period ends. you have anywhere from 60 to 90 days to submit a request for a loan forgiveness. You have to read your note to see what the bank's expecting. They have 60 days to approve or not with a forgiveness. So you need to look at the note, make sure you get the documentation, accumulate it week by week. And we had provided our clients with a template to track, to accumulate the data, which is comprehensive, way more complicated than the application part. And just last week, the SBA released its loan forgiveness application, which is 11 pages of accounting nightmare stories. So people have to be familiar with the application, start to get the information, talk to their accountant, who I'm sure will be familiar and will help them make sure they're ready to apply.
Is it their accountant more so than their banker, correct, on that form?
Oh, definitely. You know, the bankers were specifically not allowed to help people with this process. So
Okay.
they're not going to be helpful on the forgiveness. Another thing to keep in mind, these rules have changed. So like I said, I've been monitoring this since March 27th, when the law was passed. Just before, there's guidance that came out almost every couple of days.
Yep.
And there's things that are still in flux that may change legislatively, and guidance from the SBA itself, who has been pumping out information on a, like I said, on a regular basis. So it's not a static scenario. You need to stay on top of it, make sure you're aware of what the rules were, what the rules are when you apply for forgiveness. Things could change before that 8-week period is over.
And you need to get it in by the end of that 8-week period, or there's a
No, after the 8-week period ends, you have either 60 or 90 days. I've seen different terms in different loans, but it's a fairly quick timeline. So you want to be sure to, again, accumulate the information as you go, so you're not scrambling to get the information. And many of the payroll services, like Paychecks, for example, have been provided reports that are tailored, at least to the understanding, to help people provide the data without going crazy, frankly. You just got to make sure that their interpretation is accurate. So you can't take whatever they give you for granted. You have to actually look at it. But they're trying to provide the tools, and I'm sure the other major payroll services as well, to make it a little easier for people to provide the information, the documentation. The documentation is going to be a key thing. You have to document every single item to the extent you're requesting forgiveness: rent, utilities, health insurance, retirement plan contributions. You have to be sure to have that information, or the banks are not eligible. The statute specifically says without documentation, there is no forgiveness.
Yeah. Okay. A lot of good stuff there. I think, that.
I don't know if it's good, but
a lot of good stuff that I think they need to be aware of. I kind of told you offline, I totally forgot about it. Oh, I got, you get the money and okay, it's going to be forgiven, but you got to make sure that you check that box and get it in.
One other thing I'd like to mention, because I got this question a lot from clients: do I have to spend the money on payroll? The answer is yes. If you take that money and you do other things with it, number one, you won't get forgiveness. And number two, you could be in violation of the certification that you signed when you applied for the loan that said, I'm using this money for payroll, benefits, rent, and utilities. So it's really important, and that's why we recommend it, and most people did this anyway: keep the money segregated. Draw on it as you need to pay for the things you said you were going to pay for. Don't pay for your don't pay your line of credit off, don't pay your credit card, don't pay insurance, property taxes, none of that stuff counts. It's really, really important. And I'm afraid that because of some of the negative things that had happened with, there was some fraud going on, as you read about. There were some companies that may have not have really, maybe shouldn't have gotten the money that did. I think the banks are going to be justifiably diligent in making sure the requests for forgiveness are well documented. So okay. It's not a place for shortcuts.
All right. A lot of good stuff there. To kind of finish up, I know it's tough to think this. I try to forecast when this is behind us, not forecasting what's going to happen with the market or anything. When this is behind us, what do you think changes from your perspective in your industry? Whether it's the way you deal with clients, whether it's tax law, are there things that you've kind of thought about that said, listen, what this does is this really kind of changes, some things forever, possibly?
Well, I don't, it's interesting because you see in other parts of the country, there's people dying to get back to normal regardless, right? They're going to beaches, they're going to restaurants, they're not wearing masks, they're just doing it. So I think there's a lot of people in America that are going to basically adapt to the risk we've lived with all other kinds of viruses. This is not unusual in that regard. From an industry perspective, like I said, our profession has always been at the forefront, of technology adaptation. Like what we're doing right now, I didn't even know about before, right? And I can't tell you how many Zoom meetings I've been participating in. It's phenomenal technology. Like you said, I don't think it's going to replace a face-to-face in-person meeting. It will definitely provide another tool. Cloud-based accounting will become probably more prevalent, but people will have to look at ways to work remotely. Like I said, I don't know what we would have done if we hadn't, a few years ago adapted to a mechanism where we could do all our work, literally have total access to every single piece of information in our office, even if we're not physically here. I don't know what we would have did.
Right.
So I think that will continue, and I think there'll be less resistance to change because people now had to go through something very quickly they didn't plan on. Because no one likes to change stuff, and I'm one of them. I prefer to keep things the way they are.
And you and I talked about this. I don't think it replaces, seeing you in person, understanding people's expressions, being able to really have a thorough conversation. But I think you put it perfectly. I mean, it's another tool that when it's not possible, we'll be able to use a lot of these things in the future. So,
Right.
yeah. So I appreciate your time as always. And to tell our viewers, for more episodes like this, they can catch us every Sunday, 10:30 a.m. on Fox Providence. They can go to the Fox Providence website and catch these interviews along with any past episodes. So, Greg, thank you. Good luck with your extended tax season.
Thanks, Rob.
And we'll see you soon.
Take care.